Hi, I'm Rada Gigi Benitez, a certified international property specialist and a licensed realtor, connecting global real estate investors with the incredible opportunities in Dubai real estate. And this is season 5 of the Dubai Connect podcast. And on today's episode, we're going to start off by talking about what to expect in the Dubai real estate market in 2025 with my highly esteemed, highly experienced counterpart here in Dubai. So stay tuned. Well, I'd like to welcome yet again my colleague Ahmed onto the Dubai Connect. Hi, Ahmed.
Hi, Gigi. Wow, season 5.
Can you believe it?
Where did time fly?
Isn't that crazy?
What a blessing.
Aren't you proud of what we've done?
Extremely, extremely. So yes, I was really looking forward and looking at my watch every day and saying, when will Gigi be back? And before you even know it, you're here.
I'm back.
So yes, let's do this.
Let's do this. So, Ahmed, I really want, our job has been, right, is to guide global real estate investors, particularly from America, but also we have clients in the UK and Singapore and in France and Germany, Canada as well, is to guide them through not just the process of how to buy in Dubai and where to buy, but what to expect for the future in 2025. So I wanted to share a little bit about some of the feedback I know have heard and I have heard, such as, is it too late to get into the market with the prices having peaked so high in December? How would you address that?
Good question, Gigi. But when people say, have we missed the opportunity? Have the prices peaked high? Compared to what? What countries are we comparing it to? If you're comparing it to the top 10, such as Singapore, London, New York, Hong Kong, India, we're not even close. So when people come up with that question to me, I wish that I was in the PR business so I could give them a long piece of my mind.
Yeah.
But gratefully, thankfully, we are not into the PR business. So we have to give them stats and facts as far as why we have not reached that peak yet. We're still a 24-year-old market, Gigi. That's still considered as a baby market. Unlike the US, the West, the Europe, they've been in it for decades. Are you trying to tell me that after every 20, 30, 40 years, they come to a full stop when it comes to growth? There's no ending to growth, and we have seen nothing. We have just seen the tip of the iceberg so far. 3 years, non-stop in a row, we've been breaking every sales record. Our average per square foot price was starting 3 years ago around 950 dirham per square foot. Today, we're at 1,500 dirham per square foot. Do you think that's where it ends for us within the next 10, 20 years? I don't think so.
That's a very good point. And I love that when you explain that we're just still a baby. And actually, even to compare, when you were talking about prices per square foot, I sell real estate in California as well. I'm a licensed realtor in California. We're at least a third, maybe a fourth less price per square foot in Dubai. And then if you compare waterfront, prime, luxury prices, Dubai is even significantly less than New York, than Los Angeles, than in Toronto, Vancouver,
Florida,
Miami, Florida.
Exactly.
So from prices per square foot, Dubai is still quite affordable.
Indeed,
Okay.
definitely.
Then we can go into the rental returns and compare that on a global basis. What are the long-term rental returns?
Well, Gigi, currently right now, especially last year, due to the demand and a shortage of supply, landlords were in a position to demand and increase their rents almost up by 25%. Which is extremely high because they were in that position to demand what they wanted. And that's one of the reasons, I don't know if you remember or not, just recently, Dubai government RERA came up with its own new rental index in order to rate and control the fluctuation. Once again, we do not want to repeat 2008 where people are just randomly adding capital appreciation without any sense or increasing rents without any structure. There has to be a structure in order to balance the market, to monitor the market, to make it fair. And when you said, did investors lose the opportunity of entering the market? This is why these are the structures that guide to make sure that everything falls in order accordingly as per the timing.
Because Dubai operates as a business and everything is done strategically. And because of the Dubai Land Department and the Real Estate Regulatory Agency working on things such as the Smart Rental Index, working with developers to control supply and demand and make sure there's that healthy imbalance where it's still affordable for residents, not unaffordable, but still benefits investors. And with the Smart Rental Index, what it's going to do is that if it's an older building that doesn't meet up to certain standards, they're going to be held accountable before they can increase their rent to the level of a newer product, right? That meets the standard.
Exactly. If we go back to some of our podcasts we did in the early stages, which was last year, I believe, this is one solid point that we kept on bringing up. Why more demand on the newer buildings that have started being built during pre-COVID time? Because the standards are totally different compared to what was being built and delivered 4 years ago. For example, in today's projects, you have the state-of-the-art amenities. Every developer is competing one another to outbeat when it comes to the facilities, to the finishing, to the amenities. So yes, of course, someone who does not deserve to be into a 5-star category should not be able to ask for that high rental return. So yes, that's one of the best things about the rental index will be to control and monetize that.
So going to the actual rates and comparing the rental returns, we're looking at about 7 to 9% long-term rental returns in Dubai. And that will continue because we have such a shortage. Dubai continues to be a top tourist destination. And of course, the population that's happening in Dubai, where it hit 3.8 million at the end of last year.
Correct.
But with the Master 2040 plan and with the trends, it's potentially going to double in the next 14 years by 2040.
Indeed. So, Gigi, there's no doubt we've been breaking every sales record last 3 years straight in a row. 2024, we ended up breaking one of the largest sales record in Dubai's history by doing over 400 billion dirhams in sales. Okay.
Wow.
So there is a reason behind that. The problem is you have the majority, the newcomers in the market who do not have the real estate experience. They have a short vision. And when I say short vision, I'm referring to they do not see beyond the high-rise skyscrapers. Their thinking process just stops over there. They do not see what brings all of this together. The main element, which is the economic agenda, which is the D33 plan. And what is the purpose of this plan? Is to double up the economy by 2033. Let's look at the numbers last year, 2024. Our GDP, one of the average GDP numbers growth for a country is anywhere around 1 to 2%. Okay, UK last year was up by 1.1%. Canada was up by 2.3%. The US was up by 2.7%. So do you know what Dubai's GDP was last year in 2024?
Above 4%.
Yes, that's correct. We were up by 4.6%.
That's incredible.
And we have been predicted to go up to 5% for 2025.
That is incredible. And we'll get into the future of, because that's the point of this podcast, Ahmed, is to really talk about the future of real estate. But if I can go back for just one moment and rewind back, when we're talking about the long-term rental returns, and we're talking about people thinking that they've been priced out of the market, and then we'll talk about what's driving it. But just to go back for a second, and we're saying 7 to 9%. Again, being a licensed realtor as well in California and setting up an office in Spain right now, comparatively speaking, on a global basis, you're talking about Los Angeles, maybe 2 to 3% rental returns. New York, maybe 2%. I believe Toronto, about the same. So where are you getting these long-term rental returns of 7 to 9% with zero property taxes, which significantly eats into your profit margins as an investor?
Correct.
Short-term rental returns, 10, 12, even higher in Dubai, right? Depending on
Correct.
where and what your capital investment was.
Correct.
Through Airbnb and other short-term portals. That is becoming, I mean, I spent the summer in Spain. They are trying to outlaw even having Airbnbs in many locations in Europe. California is becoming more difficult. New York is becoming more difficult. London, Toronto, all of it's becoming more difficult to do Airbnb. Dubai welcomes investors to have the short-term rentals. Of course, there are regulations in place, but it welcomes them, such as a smart rental index, etc. And again, all this is done digitally. So we talked about the entry-level price per square foot. We talked about the long-term rental returns and on a global comparison basis and how Dubai far outweighs all these other areas. And that talks about the future of Dubai 2025. Short-term rental returns, no property taxes. Now to dive in deeper into what is driving the economy, what is driving the real estate opportunities in Dubai for 2025 and beyond. That's where I do believe it's so important for our viewers and listeners to understand. This is not, you say this, and I love when you say this. Dubai's real estate is not a stock market.
Yes.
I love when you say that.
I've always said that since the first time I got into the industry back in 2002. Being a stock trader, that's why it's easier for me to do the comparison with the two.
Right.
People who've always treated real estate market as a stock market, they've always walked out losing.
Right. So when people come and say, oh, I want that quick flip. Look, we know a few years ago, people made millions doing that.
Correct.
We understand.
Yes.
And for those people that now say, oh, it's too late, if that's their objective and mentality of treating Dubai as a stock market, where you walked in to a developer's office, got your hands on an off plan, and let's say even before DLD regulations placed the minimum hold that you had to have before you flip, but you walk out, you flip it, you make your millions. That is also what contributes to a bubble. And
Correct.
that is not sustainable. And as an investor, if that's what you're looking for, don't do real estate.
I agree 100% because, Gigi, it was these type of investors, the flippers, who created the bubble to begin
Correct.
with. And when it crashed, they were the first ones to make the noise and complain what went wrong, not realizing you are the ones.
You contributed to it.
Exactly. You contributed to it. And that's one of the reasons RERA was formed during that time, to prevent such a big event. Let's clear one thing for once and for all. I'm sure we've been getting this question a lot from our investors, especially Americans, because they took the biggest beating during 2008 during financial crisis.
True.
People use the word bubble very casually in today's time, which I disapprove of. There's a difference between a bubble and a market correction, okay? The bubble, for people who are not aware of, once again, people use it very formally, not knowing what even caused the bubble. It was one of the first financial crises global that was linked to the real estate. And why that was? Because US, the investment bankers, were selling mortgages, okay? And they were financing people who should have never been able to afford or own a home with zero. You know how difficult and restricted it is as far as your security backup check. If you don't have a good security, a credit score, you don't get qualified to finance for a home. Imagine that's what they were doing in 2005, 6, and 7, where literally everybody was being encouraged to come and take a home loan. And what happens when they were not able to pay off? people started falling delinquent on their payments. That's when they started falling into foreclosures, and it was a domino effect globally. Now, don't get me wrong. The reason Dubai felt the effect of 2008 financial crisis because a lot of Dubai's investment bankings were investing in the West, in the US at the same time. So at the same time, during that time, a lot of developers in 2002, when they were buying their plots, they were not buying it cash as per the new law in Dubai with RERA. Now a developer has to own his land before he comes out and be able to sell it. Back in those days, they were taking loans from bank and buying their land, and even as far as paying for construction, to pay for construction. Now, when the market crashed, guess what happened to a lot of these handful developers? They couldn't afford because people, instead of sending their monthly installment or quarterly installment, they stopped because they were feeling the heat back in their own country. So when there was no money coming to the developers, guess what happened? They couldn't afford to continue on paying for the construction. So a handful of them packed up and fled the country.
Yes.
So guess what happens to the bank? Who's going to pay off the loans now? There's no one to pay off the loans. And that's why we had this crash. So will Dubai face another bubble? Of course not. No way in the world we will face another bubble because our market has been regulated since 2008 to avoid such incidents. That's number one. Number two, and I've said it previously, we are not a mortgage-owned society in Dubai. Unlike the US, we've been blessed and fortunate enough, especially these last 4 years during pre-COVID, majority, and when I say majority, I'm talking about over 80% of the buyers have been going along with the developer's payment plan, meaning in 3 years, they are paid off. They own the home with a clear title deed. The banks will never own our real estate in Dubai, which is why we avoid foreclosures, which is why we will avoid this whole terminology that people use, bubble effect. So going back to your question, is there going to be a price correction? Okay. Yes, there will be a price correction, but you know what? Not anytime soon. But when the time comes for this price correction, who will be affected? People who've been buying lavish, overpriced, high-end projects. I'll give you one example. A 30 million Palm Jumeirah villa today, anyone who's selling it out in the market for 250 million dirham, of course, will feel the pinch. Of course, you will see a price correction over there, okay? Because there has to be a justification on 500% or above capital appreciation. We could talk about a lot of other high-end projects where they are facing and dealing with the same situation. But this is where the correction will come. But the average person who's coming into Dubai, who's buying an apartment worth starting anywhere from $240,000 out in the suburbs versus buying something for even $500,000, one of Emaar projects, are they going to go through a price correction? Of course not.
I actually, speaking of Emaar, what you were just talking about is that their fine founder just did announce, or the company did announce, that for this year, for 2025, they're going to focus on delivering versus continuously increasing the prices at the same level that they were increasing. But Ahmed, this is where I say people have been spoiled here.
Yes, we
Prices
are.
went up 50% in the past 4 years.
Correct.
They went up, I believe, 25% last year. Anybody who understands real estate understands it's a cycle. Real estate is a cycle.
Yes.
Okay, so understood it's going to level out. And when we say price correction, we don't mean drop.
No.
We mean that
Stable.
rate of
We're
growth
gonna
is
see-
going to stabilize. Yes.
Which is very healthy.
It is healthy.
Yes.
And I can talk more about the bubble later in another podcast about what UBS said, that even though Dubai had the greatest increase of price per square foot over the past year, that they're still considered only a moderate risk, because the bubble, being in a bubble, is also, if it's speculative buying, if it's not actual need for property, if the supply isn't going to be able to meet that need, there are other factors, and Dubai does not play with that, right? That's not the situation.
Yes.
But going into, so with Emar and with a lot of other high-level developers working closely and strategically with the government of Dubai to monitor what's happening since you said 2008 and make sure to decrease the chances ever of having a bubble.
Yes.
Okay, and then working on delivering. Now let's look into the future of Dubai and what is driving this place to continue to be one of the best investment options for someone who understands real estate, is a savvy real estate investor, and is comparing building generational wealth, not the flippers market, stock market wealth,
indeed.
generation wealth through real estate. Why is Dubai the place to be? And of course, you mentioned the D33 plan, the D33 agenda, the GDP, which is extremely important because it symbolizes the strength of our economy.
We've almost forgot to touch two main aspect parts to this plan.
Okay.
One is the urban plan. Okay, that's one very important factor. The other one is the greenfield foreign direct investment, which is almost last year, it was almost close to 39 billion dirhams was spent by these foreign companies. And the urban plan, why we are so much focusing on the close coastline towards the Dera and the Bird Dubai area, the Expo City, these 5 areas fall into the urban hub because that's where they're planning to shift the 5.7 million that will be migrating and living in Dubai.
Because there's no choice.
Because exactly.
How much more space can you do? Exactly. So I love that you're talking about that, because we'll get into other podcasts about the areas in there, whether it's like you said, Expo City, and then by Dera and Bar Dubai would be like Dubai Islands, Maritime, Port Rashid Yachts and Marina. Correct. And that's important. And then what about the Master 2040 plan? In general, that is one of the most important factors when people especially ask you, well, why are those people going to be here for? Who's going to be able to afford to buy these or rent these property? Where will the jobs come from? So yes, this is where the category falls into, because when these foreign companies are coming and investing directly via greenfield and not brownfield, is because when you're coming and investing through brownfield, it's basically you're looking into collaborating with a business partner over here to cut costs of your expenses. But when you're coming as a greenfield investor, guess what? You're starting to build from scratch in Dubai. So imagine the kind of money that you will be spending into this country to build the infrastructure first, the factories, the number of staff you have to hire. So the list goes on, and that's why the figures are so large, because this is what creates jobs at the end of the day in Dubai when these foreign investors come and invest into this country. And with jobs, that creates a necessity for a place for these
so
people to live.
Should, and this is why, Gigi, it is very important that people should start looking beyond just the skyscraper, the numbers as far as what kind of view is offering, what sort of capital return. They are missing out on the biggest point, that what runs the country. It's the economy that runs the country.
Yes.
We already have our future set up 20 years ahead of time, which is why we are so confident to say there is so much of growth, because no one wakes up in Dubai overnight and says, I have a great plan today. No, everything is pre-planned. All the cards will be set up on the table when the time is right. No smart.
I know, it's little announcements at a time that they
because
give
Gigi,
us, right?
If the market is doing extremely well on its own, why should anyone lay out all their ace cards on the table in one shot?
Yes.
And that's why I believe we have so much more surprises coming ahead that will shock people and motivate more people to invest. So for those pessimistic investors who've been sitting on the sidelines since pre-COVID, assuming that, yes, once again, this is a hype, this is the bubble. These are the same people who will end up entering the market at a way higher price per square footage because pre-COVID, the average price was 960 dirham per square foot. Today we're looking at 1,500. So these people have already missed that boat. You see what I'm saying? For being pessimistic.
On Bloomberg, actually, I just watched Zainab Fatah was on there, and she was talking about the projections for this year are an increase of 8%, 5% in the prime market in Dubai. So when someone says, I missed out, let's go and just compare that to New York, to London, to Toronto, where it's maybe 3% or 4%. So it is still 8% is
Correct.
huge.
Yes.
And it's just not what it was last year. No, because there has to be a stabilization. So the future of real estate investing for those who want to, again, build their wealth, diversify, be a part of the city of the future that's constantly, like you said, laying out another one of their cards about what they're going to announce, whether it's this initiative, the AI campus, their university initiative, the smart rental index. I mean, they're the largest airport in the world, the metro system that they have for connectivity. It's just going to continue to grow because of the vision of the Sheikh.
Yes. Gigi, you just mentioned a very good, solid point. The Airbnb, okay? For everyone who's been asking us, who's going to fill out these apartments? Did you know 2024 ended up with 21 million visitors in Dubai? And it got to a point where in November, they stopped issuing visit visas because we had filled in our quota above our expectation, and we couldn't let any more people in. Now, tell me something. Do you honestly think we have 21 million hotel keys in Dubai today? We don't. So when people ask you who's going to fill in these Airbnb hotel rooms, you know the answer. And with Sheikh Maktoum Airport coming up, where we're planning to bring in 220 million visitors at a time, where do you think these people are going to stay, Gigi?
Exactly.
So when anyone asks you this question, just give them the figures. We are blessed today. We have all the stats and the figures. We're transparent. Compared to 22 years ago, we didn't have these data and statistics. Today, we have access to these numbers. So it's not just a sales pitch that a broker is giving to you. The numbers are the facts that back up what you're saying.
You're right.
So yes.
Then the numbers don't lie. Having said all that, I think we covered a lot of information about the future of investing in Dubai real estate for 2025. It's still important to work with an experienced and an ethical and well-rounded real estate broker agency company that can help guide our listeners, viewers, and investors, not just into the process and which projects to invest in, but the post-sale service of timing the sale of their property, helping them with property management if they're looking for rental returns, helping with a financial concierge if they're looking for the golden visa, which, for example, in Spain, they just right now announced the end of the golden visa program, but Dubai is continuous that.
And not to mention the 100% tax that is coming up.
Which I don't think that will be approved, but it's already scared a lot of people off. Because imagine if I'm an investor, if it's even a chance of 100% tax.
Well, Gigi, if Singapore did not hesitate to add 60% tax, so don't be surprised.
We'll see. You know, being in Spain and doing real estate in Spain, a lot of us think this is it's to appease the people, which all of this goes back to how welcoming Dubai is for people to come, live, work, enjoy, raise their families here, visit here, invest here, open businesses here. And on season 5 of the Dubai Connect podcast, we will continue to present the upcoming opportunities and areas to invest in, and also talk about business and how to open businesses here, and talk more because I'm receiving a lot of inquiries now about, okay, we know we want to invest there, but what if we want to move there and open a business? So we'll cover this throughout the podcast. But again, it is important to work with someone that is going to be able to guide you in that post-sale service to be able
Give
to
you
really
that
maximize.
after-sale service.
Absolutely.
Indeed.
And not everyone does it.
Indeed.
So, Ahmed, it's always a pleasure. Like I always learn something new every time we sit down and talk, which is every day. And I thank you for taking the time
Pleasure's
to come
all mine, Gigi.
and to help me on this journey of being the Dubai Connect.
Thank you for having me by your side.
Thank you. So with that, please make sure to like, subscribe, follow, and share. And stay tuned for the next episode of the Dubai Connect podcast. Thank you and happy investing.